Hello, trading is closed on June 14th, 2022. Let's start with our disclaimer, which is what we always do. It's my trading plan for tomorrow, June 15th. Remember, I can be wrong, and any trade one makes should be at one's own risk. Look for the pattern with the early high. Tends to hit the early high, late high. These are pretty mixed, so then tomorrow should have the early high too. These are pretty mixed signals. Gap up, hit a higher high, close under all the highs, that's negative. Drop all day, close over all the lows, that's positive. Should be resolved by gapping sharply tomorrow. Doesn't tell us which direction. This is a pattern which usually rallies into the close and closes near the high. That didn't happen, but tomorrow's open can substitute for today's close. So if we gap up, probably take out this high, all is forgiven. If that's not what we see, there's typically a straight line drop. That didn't happen either. If we gap down sharply tomorrow, all is forgiven again. So it's a number of reasons why I'm thinking we're going to have a big gap at tomorrow's open. None of that tells us the direction, though. MEJT gave a sell signal in the morning. That worked. Said this move was false, would retrace. Said this drop was false, would retrace. Said this rally wouldn't stick, it was false. Gave an ultimate sell signal. We got that. When it dropped, it said that would retrace, and that's already played out. We're now 2 days into the week. We need to recover last week's close by Friday's close, or else major support fails and we could be in crash mode. We still have this volume spike here. Usually it occurs near lows, but again, I don't know if we're going to have a higher spike tomorrow. We had these trend lines. We said either you gap under the trend line or the trend line wins. We didn't gap under it. We did trade under them, but we've already retraced to this trend line. Since you've already retraced, that's all you really have to do. It does take that 640 handle drop I talked about off the table, though. That only applies if you gapped under the line. We also had some good fib ratios, and today's lower print destroyed those ratios. Now, you don't have to have those ratios to make the count right, but when they get invalidated like this, I think it's wise to look for something else, because although you don't have to have the fib ratios, usually you do. We're still in the time frame for a major low, but the market hasn't shown much interest in that yet, but you never know what'll happen after the FOMC tomorrow. This is still a fib target of the prior consolidation, but that didn't stop it from dropping today. We already gave you the reasons why we think we'll have a gap at tomorrow's open. Let's not repeat them. Tomorrow's pattern has the early high. We could still gap down. Today's pattern should have closed either near its high or at a straight line drop. Since neither happened, there should be a big gap at tomorrow's open, with the open substituting for today's close. Today's weak market did considerable damage to the technical picture. Significant trend lines were broken, although we've already retraced to them. Remember, none of this counts if you don't trade under today's close by 1 cent. The Fibonacci ratios in my wave count were cast aside. I really can't come up with a clear count saying the drop's over. Doesn't make me right. A number of positive elements remain. Some indicators, NASDAQ McClellan Oscillator and Volatility Index, have traded through their Bollingers. When they reverse back the other way, it gives a buy signal. Supposedly, I read today the dollar amount invested in put options is at a record high. That should be a contrary indicator. You know, specialists are obligate sellers of options when the public is buying put options up to the hilt. The ones who are short those options are usually market makers, and the market makers aren't going to stay in business if they lose money. The FOMC report comes out tomorrow. Typically leads to wild swings. I just can't predict them with a sufficient level of accuracy. Accordingly, I look for a big gap at tomorrow's open, trendless trading until the FOMC announcement, and then wild swings followed by a big move. Sentiment readings argue for the next move being higher, but today's low may be undercut as well. I rarely put money to risk on FOMC announcement days. I'm just going to make one more comment about how the MEJT system helped me today. When we were dropping like this today, I was just champing at the bit, ready to go short. Here you had this big consolidation. It's a normally bullish pattern. We're dropping. I would expect there to be just a collapse, but there was a higher target, and my rules won't let me short when there's a higher target the same day. And even though I didn't make any money when we went up here, I sure didn't lose any money by going short. And one of the big advantages of the system isn't that it maximizes your gain, but it certainly minimizes your losses. And I think if you can just avoid losing, the winners take care of themselves. Okay, FOMC day tomorrow. It's a pattern with the early high, a big gap at the open, a big move by the end of the day. I don't tend to risk money till I see where we're going. There are less risky times than FOMC days to put your money at work. And that is today's call.